Hey, welcome everyone back to the office for the Q3 2019 earnings analysis for Tesla. Um, I'll just say one thing. It was a shocking blowout. As you may know from my previous videos, I'm a Tesla skeptic. However, with quarters like this, I start to question my skepticism as this was just a blowout quarter. And one of the things that I thought was pretty shocking, the G3, the Gigafactory in Shanghai. This is a shot of it. And there's other pictures of it in their earnings release on the inside and everything too. But nothing was there 10 months ago, and now you have a full facility that they're qualifying the line right now. It's in the qualification phase, and you can see, cars out here. I believe those are ones that are produced. I don't think those many people be driving to work there, but unbelievable that you could put this kind of factory together in 10 months. It's just crazy. Look at Q3 deliveries. The S and X were 17,483. The Model 3 was 79,703. Moving on to notes from the earnings call, and these were, the order kind of jumps around a little bit here, or the content kind of jumps around, but it's from the prepared statements and the Q&A that was held during the call yesterday afternoon. So they're saying now summer of 2020 for Model Y production in Fremont. So that's ahead of schedule. Equipment's already going in. Full driving functional release by the end of this year. You'll still have to monitor it, but they're saying the full robotaxi by the end of next year. Whether you really want someone to use your vehicle as a taxi with you not in it, I don't know. Maybe you do. Might be a revenue stream for you. And then the European Gigafactory location to be announced by the end of this year. One good thing, as we look back at the previous two quarters where the cost and profit of the S and X was kind of messed up with the changes they're making, but they announced that the average selling price increased for Q3 and production is increasing in Q4 due to demand. So that's good because demand is down, quite a bit since last year, as the as the Model 3 has really kicked in. The Model 3 average selling price declined slightly. That's not a big surprise to me with the lower cost versions coming out. But even though they're still trying to make it difficult for you to get, the standard range version with no options of the Model 3. The order backlog is growing and strong in all markets, so that's good. and then Elon was just giddy about the solar and storage business. He had a guy on there that's in charge of that division, trying to go over some highlights and things like that, and Elon just nonstop interrupted the guy. But he's excited about it. He's thinking that it could be even bigger than automotive. And they had taken resources out of that division to help out with the automotives, and they've now put them back in there. And that's why they're looking for big things there and some good growth. He said they're going to announce today version 3 of the solar roof panels. So that should be coming out today. Said the version 3 has corrected the issues that they saw in the version 1 and 2. So he's excited about that. Model Y, as I said in the beginning, is slated for the middle of 2020 for 1,000 per week production volume. And he said he doesn't expect any downtime for the Model 3 with the installation of the new equipment, and the margin will be higher than the Model 3, but what costs similar to that. So it's basically a Model 3 that's taller, and since SUVs tend to carry a higher price. That's just going to go right to the bottom line as higher margin. Giga 3, volume production in a few months, and they're building another building's going up too for battery production. I talked about car insurance. As you'll recall, I think it was just last quarter it was an idea, and of course the way Tesla moves, it's already implemented, and just in California so far, but they're working to get other states lined up. It's been well received, they said, and they didn't really want to become, they don't want to become an insurance company. They just want to keep the insurance companies in check, give them some competition to make sure that the Tesla owners aren't having to pay more than what they should for their insurance. There's questions about the Model 3 profitability. If it's going to be better in Shanghai, they said at launch it should be equivalent to what it is at Fremont. And for owners out there that have a Model 3, there's upcoming software update coming in the next few weeks that is going to give you 5% more power, so that's good. They said for the S and X it'll be about 3% increase. So we go on to the financials. Revenues were 5.35 billion for automotive, cost for 4.13, gives you a gross profit of 1.22 billion, and a gross margin of 22.8, which is an improvement. And they didn't give any real color around where things are at for the individual vehicles, other than just broad statements. So I'm going to estimate that the Model 3 gross margin is still around 20%. And the average selling price for the Model 3 is estimated to be $48,000. I had it at $50,000 last quarter, and they said it decreased slightly. So I'm not sure what slightly is, but I'm going to put it at $2,000. This would give you a Model 3 cost of $40,000, and the gross profit based on that. So you take the 48,000 average selling price times the volume, which was 79,703, times the 20% gross margin gives you 765 million. The gross profit on the S and X, then you would subtract that 765 million off of the 1.222 billion, gives you 457 billion dollars. The revenue for the S and X, basically you take the overall revenue and subtract off the revenue from the Model 3, and that gives you 1.527 billion. Then you take the gross profit divided by the revenue and gives you a 30% gross margin for the S and X, which is back in line with what it was historically. It got messed up the last two quarters with the changes that they're making, like putting the Model 3 motors into the S and X. And I don't know what the details were around that, but you'll see from the chart that things got really messed up there. It's good to see it's back in line. Average selling price came up to what I calculated out to be $87,700 for the S and X, which is down from where it was a year ago. We were over $100,000. So it's down substantially from there, but they're still at 30% gross margin, and it's not real high volume compared to the 3 anyways. Total operating expenses were 930 million, which is a decrease from last quarter, which is good to see. And total revenues missed what the street was looking for, but we're at $6.3 billion. Operating expenses per revenue was about 15%, 14.8, which is. So if we look at the Model 3 cost and average selling price, you'll see a steady trend down, but the gap between the average selling price and the cost is staying pretty consistent. So they're uh, keeping their gross margin there, which is good. Even though the average selling price is coming down, they're being able to get the cost down as well, which is good to see. The Model S and X, so you can see historically it was a good performer. I mean, it was high price, but it had good gross margins. And then, as I said, the last couple quarters things got really messed up where the cost started to come up, um, and the average selling price coming down, and the gap kind of closed even further last quarter, Q2, I mean, which was starting to be concerning. But they were able to turn that around, get the average selling price up, and get the cost down even further. So they got the margin back up to 30%, which is good. So again, I want to thank you for tuning in. If you have any comments or questions, please leave them below. And look forward to speaking with you next quarter.